All right, YouTube, we're back once again, another live stream. So let me go ahead and start screen sharing my screen, so that way you're able to see all of my positions. I know we're having a down day today. Pretty much all the indices are red, and all of my everything that I have on my watch list is just about red, except for a couple that I am watching. And what you want to watch out for, you want to watch out for those stocks that turn positive whenever the market goes down. Also, you want to pay attention to the stocks that actually move with the market. So usually AMD is pretty much, I would say it will be down for the day. It'll pretty much follow the Dow Jones. But as you see, there's been a divergence with AMD and the Dow Jones. Usually, we see the Dow Jones start to, climb back up, and that's typically when AMD is able to, take a rally, go on maybe a 3%, 4% run, depending on how much the Dow Jones is up. But now you see, a complete divergence ever since that huge drop that they did have. That typically, kind of uh, I would say stop correlating with the Dow Jones, and now we're able to see AMD start to diverge itself and start to work itself back and try to fill that gap. We see a gap right here. I would say maybe 13, $13. We call it $13 even, and we see that the gap is tried to be filled right here, and also we try to fill the gap right there. So what we're doing right here is that we're slowly uptrending, and that's all we're doing. We're slowly uptrending until we fill that gap, and probably fill another gap, and probably go to $15. And we all know how I work those incremental values in. Once we break 15, we go to 20. Now, with that being said, let's check out Square, because I know Square is pretty much getting close to $25. So remember when Square, I was trading this thing back at 19, $18, $17. Remember I bought it, and ever since the earnings beat, we did see it kind of top out at $20. Now it did take a rest, but like I said, once we get a really good earnings beat, that opens up doors. The stock was already trading at 15, and we start to see the stock move ahead before the earnings. And once the stock, jumped, we see it try to hit 20. It, I sold at 20, got back in at 18, and just kept buying and selling, pretty much trading and still investing in the company. And that's what I'm going to do here. But the reason I'm not investing in right now is because we're waiting on quarter two. We're going to see how quarter two does. If you listen to the conference call, we know that they're expecting a loss of quarter two, but although we have a pretty positive outlook for the company. So we see 25 is trying to be tested here, but the only reason 25 has not been broken out is because the only reason 25 has not been the price or the price target just yet is because we're still waiting on those earnings. Also, if you're following the all the Dow Jones, or you're following different indices, we know that there's kind of a top in the market, but I would say there's a top in the market for the ones that have been on a run. So the S&P 500, Nasdaq 100, or the Nasdaq itself. But we see that the Dow Jones continues to climb up. So remember, I was telling you guys about 25, or I would say 21,500. We did see that level yesterday, and we're at that level today. So like I said, we start to see 21,500. That opens the door for 22,000. So hopefully you guys are able to get this incremental value and be able to trade off of this, or be able to invest off of this. So that way you'll understand where exactly stocks are going, or where you should put your price target, or how you should, I would say, calculate your profits, or maybe even put a stop loss, or maybe even put a sell limit in. So let's go ahead and check out Snap, because I haven't been watching this company. So we see Snap hit $17, and that's pretty much where where the private IPO started at. And we opened up at 24 back a couple months ago, back in what is that? March, I think. Yeah, I think it's March. It might go back a little farther, but I would say Snapchat is definitely failing on a huge level. Also, we see Facebook is starting to increase with their the Facebook and Instagram start to increase. We see Facebook and Instagram starting to hit 250 daily users, 250 million. And I just got that alert 17 minutes ago. Like I said, Seeking Alpha is definitely a really good tool whenever you want to invest, or whenever you're thinking about trading something. You want to keep track of these companies, and I get I would say maybe 300 notifications on different companies, and I filter out what news I need and what news I don't need. So that's how I'm able to cipher on um, which pick will be the most profitable for me. So right now the market, is kind of, I would say, sideways or maybe taking a break. We're really seeing on how this Trump situation will play out. But what we did hear from CNBC yesterday, a floor trader was saying that the end of the week was going to be crazy. We're going to start to see more bids coming in. I'm guessing more investor confidence is coming back in the market, which brings the volatility down even lower. So we're going to start to see maybe more buying. Is what from what I heard on CNBC. I checked in just before the market closed just to see exactly the imbalance orders. Is it more to buy, more to sell? And typically you guys should check that out just to see where the market is or where the investing confidence is in the market. So we see Snapchat is definitely getting hit. We see right here CNBC News just tweeted. I got it on Seeking Alpha, but we're getting here on CNBC. Instagram stories crushes Snapchat, now has 250 million daily active users. So people are still buying the stock. People are still saying, okay, you know what, they're going to come back. This is just a small temporary dip. I want to be able to see something, or see a change in this company. We see, the first quarter, they have already showed a $2 billion loss, messing around the IPO. And we're going to see how quarter two comes out. But I'm really not optimistic on this company in general. This should have been a company that stayed private the whole time. I'm not, I was never on board with Snapchat going, public, because there was really nothing there to invest in, since we already have a Facebook and Twitter, and pretty much Facebook can do what Snapchat is already doing, and that's typically what they're doing right now. We see, like I said, right here, Instagram stories crushes Snapchat. That's Facebook. So Facebook owns Instagram for you people that did not know, and Facebook is doing the Facebook stories as well. So what Facebook wants to do, they want to take out Snapchat. I've been telling you guys this since the IPO. Facebook wants to be able to take out Snapchat. This will be a long-term process. We definitely see that. We see a high right here. We see highs right here, high right there. And typically what that means is lower highs. And that's exactly what we're seeing here. And this is exactly why the stock is trending down even lower. So whenever somebody starts to buy Snapchat, ask them exactly why. Probably give them 3 reasons why, or 3 reasons why they should not do it, or probably walk them through the process before they actually put that buy order in, because we know that Snapchat is still struggling. We see, they're offering discounts for advertisers to put their ads on there, because, I'm a user of Snapchat, but I don't invest in it. But I would say whenever I'm on Snapchat, we flip through stories, and sometimes we get commercials here and there, but I'm not going to watch the stories. I'm definitely going to exit out of that thing really quick, because I really don't care to watch commercials on, Snapchat, or, I'm not even thinking about watching commercials when we're just flipping through stories. But I would say, one thing is very helpful is that, you can read some articles on there for free, and I'm not sure if they're going to charge for that, but if they do charge, I'm not paying for it, because, we can always go to the actual company's website instead of actually paying for something you can get for free. But that's definitely one interesting thing that they do have on there. Other than that, I really, I'm really clueless to what else, this company can do. We see spectacles, those Snapchat glasses, that was, I would say a trend for a while. And after that, you're really not seeing anybody with those things on, or you're not really seeing, a lot of people going out and say, okay, I'm going to go ahead and get this right now. Or, that was probably just for the, that was probably just a trend for in the moment. So let's go down the line like I always do. Berkshire Hathaway, we see that, we're up about $1,600 on that. And it's really funny because when I bought Berkshire Hathaway, we see that, I was taking maybe like a $800, $700 loss on this. And I told you guys it's going to bounce back up, because no matter what, Warren Buffett is going to always have secure investments. And what we tend to notice is that Berkshire Hathaway also moves with the S&P. So we can just hold Berkshire Hathaway long term, and it'll definitely move exactly, in lockstep with the S&P. We see Chesapeake Energy. We see really hot summers. Global warming is a thing. It's not a hoax. I'm still optimistic on this company. I was really optimistic in APC trying to get that thing back up to $60, but we did see it ultimately fail with that with the rig explosion, them shutting down the rigs, and also their earnings. So we had two big events happen with APC. So let's go ahead and check that out. We had two big events happen at APC, which this was I would say the rig explosion right here, which kind of brought the stock down, and then also we had that really bad earnings, and which sent this thing gapping down, and now we're sitting at APC about $45. Honestly, if this is a long-term thing, $45 is definitely a steal because remember, natural gas and oil definitely go in cycles. So remember, we're just at a down part of the cycle right now. We're starting to get hotter and hotter winters and warmer summers. So or maybe hotter winter, warmer summer, whatever it is. But it's definitely starting to get more hot rather than cold. So that depends on the supply and demand for oil, supply and demand for that natural gas, and definitely read up on that and see how those correlate. Once it starts to get cold or once the season changes. So definitely look up the correlation between the season changing and your natural gases and your oil commodities. So that way you'll understand that chart or that pattern just a little bit better. We see Disney. This is Disney is definitely going down. 105 is definitely a price target for me, but we see this thing is still falling down even more. Let's check that out. We see Disney definitely gave out on that earnings miss, and also we noticed that ESPN is starting to do. ESPN is still doing horrible. We see it break off of that 116 level and just continue to go down. So we're about $12 off of the highs. I'm not sure if this is an all-time high. Let's definitely check that out. No, all-time high is 122. It might go higher than that, but we're only going 3 years back. Don't really not really concerned about I would say 20 years from now, but I would say Disney is definitely something to look into if you're looking for a long-term trade or a long-term investment. This is definitely something to look into. Definitely read up on the earnings call and also understand what you're investing in before you buy something and continue to lose money for probably maybe 6 months, and then just when you sell it that 6 months, the next 6 months is the stock going up and maybe hitting all-time highs. So we want to pay attention to exactly the way stocks move, because some of these moves are short-term and some of them may be longer term. But when we get a credible company such as Disney, these are just short-term moves in the market. And, this thing will probably rebound back up. But we did see all-time highs of 122 a couple years ago. So this definitely is a red flag when we are investing in that. So we see Home Depot. Like I said, I wanted to get in Home Depot because this thing is definitely going to run back up. And we see we're up about $300 on Home Depot. Put about $7,000 in Home Depot because 180 is my price target for Home Depot. Let's definitely check that out so that we understand where I'm coming from. Remember, use the incremental rules. 150. Once we break out of 150, we definitely go to 180 easily. And the only thing that's holding the Home Depot back or other bigger cap stocks is that they always move with the market. And that's typically where you get your Dow Jones being down for the day or your Nasdaq being down for the day, because some of the big name stocks do contribute to those indices being down. And this is just the penny stock that we did have. Like I said, watch out for those triple zero plays. This is definitely a penny stock that I wanted to invest in and show you guys exactly how these things are ran. So we picked a random 000 penny stock. And we see it has not made us any money yet. And I've been holding this thing for a couple of months now. So definitely take note of that. Anytime somebody tells you, get in this 000 penny stock, we definitely see that it has not moved. Although, I did pick a random one. This is not one that had a lot of volume to it. But we don't, a lot of people think that, you just pick a 000 stock and just choose that one. No, you have to pay attention to where the volume is, where the hype is, and who's promoting it. And that'll, actually make you some money. But I still wouldn't recommend it because it's very dangerous, because you might think that the stock is very active, but it might just be people putting in I would say $100 orders in the stock, making you think that, the stock is trading, I would say, very actively. We see maybe Apple could trade, let's say, a couple million shares a day. That's definitely not the same as this penny stock right here. This stock may get maybe 5 million shares, 5 million shares at the most. But what we don't know is that 5 million shares in this stock is just $500. And you might think, the stock is very active, but people just, placing these really small orders and making you think that's active. And some people, placing orders in for about $20 here and there, making you think, it's active. And usually what you're doing is you're buying a lot of stock and you cannot sell it because the stock is not active enough for you to sell it. So there's not a lot of people selling the stock because there's a lot of I would say there's a huge imbalance here. There will probably be 5 million orders to buy, but there will probably be 1 million orders to sell. So if you have $500 and you want to get it out of the stock at 0002, doubling your money, the prices probably wouldn't be able to fill all your shares at once because there's still not enough active volume going on there. So this is definitely a trap. Watch out for it. We see Honeywell definitely climbing up. This is definitely one of my favorite stocks here. Honeywell, we're up about $200 on it. This is definitely going higher, maybe 150. We're gonna definitely use that incremental rule when we invest in these credible companies. And that's typically what made me buy it because we did see the earnings call. I participated in the earnings call, definitely taking notes. Also trying to figure out where exactly this stock is going and trying to figure out if it's a long-term investment. Lululemon, we're at 52. PLX is definitely a penny stock. We see we're down about $680. And typically people are investing in this thing for long term, and they want to see where this stock is going, and they want to see that huge growth, that millionaire growth. And some of these stocks are not able to give you that millionaire growth because most of it is a scam. Most of it is, just scams. Timothy Sykes was able to tell people finally that, the stocks he trades are just scams. And definitely check out that video. I think that's called Timothy Sykes of Cheddar. Definitely check that out. But Starbucks, we definitely see this is definitely my personal holding right here. And I'm using this stock just for the dividends. I really love this company. I see it as a growth company, but I'm definitely using this. I think that's just about it. We see the triple Qs here. Definitely NASDAQ. We're about $700 on it. Take-Two Interactive. This is the video game maker. Twilio. We see it coming back up to $30. So I just definitely wanted to show you guys some growth here for a while, but we're definitely going to check back in and see exactly where these stocks are going. But for right now, some of these stocks are at discount prices. Apple definitely at a discount price. We see it was just about oversold. 145, 156 is definitely, all-time highs. Definitely, the stock is definitely going higher. But we want to make sure that we're being careful in the price that we're picking the stock. We don't want to buy at 154, and for the stock to be at 145, we definitely don't take advantage of buying more of the stock because we're scared that we lost a lot of money. Let's go ahead and get out. No, this is the time for you to go ahead and buy more. So with that being said, guys, I definitely will check back in on you guys and show you, where the growth stocks are. Had to cut the video very short. Something just happened. But other than that, guys, take care. I will be back for part 2 tomorrow. So make sure you guys are reading up and understanding where growth is and understanding what a growth company is. Take care.